natural gas and oil. Yeah, so that's my strategy. But copper, as I said, the whole week, it's my favorite. Now, natural gas, I love the pattern here, but it doesn't mean it's going to work, right? I put this up on X a couple of times yesterday. We talked about it in the session. There's the one up, one down reversal candle at the wedge bottom. We don't have a lot of impetus for this to go up, but I like to trade off the charts more than anything else. And I do look at weather, and I do look at war and geopolitics and interest rates, who's moving money around, what the US is saying about LNG, and what's happening in Europe, and what's happening with supplies in the South Pars fields, and what's going on in Iran, and what's going on in the Russian and Ukrainian gas fields and the transport routes around there, which everyone's forgotten about already. So yeah, keep an eye on all of that, of course, and it's very confusing and complex. And that's why sometimes it's better just to simply look at the charts, or at least if you can't make sense of what's going on in the world, which I certainly can't. I think I've got an idea of what's going on, a vague idea, but no one knows, unless you're right up in those echelons of power in those decision-making corridors, and you know what the real plans are. I sound like Tucker Carlson now. Don't want to sound like him. I like Tucker. I think he's gone a bit weird. The real plans, what are they? That's how Tucker would say it, right? So I like to look at the charts if in doubt, right? So there's a lot of uncertainty in the world, and the charts often tell us why we should be doing this or that. Not why, rather, what we should be doing, not why we should be doing it. And when we look at this chart, you can see it's got a rounded bottom with a one up, one down candle in the middle at the bottom of a falling wedge. We're not above the 20-period moving average on the 4-hour, which we want to get above. We've only got above it twice in the last month, and both times we fell, that's the green line, failed below it on both occasions, there and there. And we tried there again a little bit, but we didn't even hold it. And we're going to try again now, it looks like, approaching that 20. But the most important thing is we've got to get through the wedge top, and then these subsequent ledges. There's one right above us here at 3.71 that I keep on pointing out. We haven't moved far away from it, by the way. And I put up on X, my last entry tranche was at 2.6 precisely, and we're now at 2.5. 5.8, call it 5.9, just about 2.59. So I'm 1 penny away from that last entry, and that's okay. I've got other positions up here as well. I'm not worried about those. I'm not worried about any of these, actually. I don't trade this on leverage, so it's not a I want to make money off natural gas. There's enough movement in the natural gas price by itself without having to leverage it, and therefore I choose to trade it mostly on leverage. But it's difficult to go to zero if you don't have or have very little leverage. So try to keep your position sizes smaller if you're trading natural gas. Learn how to do it properly, and then ramp up your position sizes later on. Trade unleveraged. You can do that. Then it doesn't really matter what natural gas does, because no matter what price you get in, it's always going to come back there. It's a ranged market, natural gas. It trades between roughly $5 and $2 all the time, apart from a few spikes up and down below that occasionally. So whatever price you get in, or whatever direction you get in at, the price will come back there at some point, most probably. But so it doesn't matter if you're not trading on leverage, but at the same point, you don't want to be holding on to meaningless losing trades. So it makes no difference. I don't want to be in a losing trade because I don't want to be in a losing trade. You don't want to be in a losing trade because you might be over leveraged. Doesn't matter. Neither of us want to be in a losing natural gas trade, right? What's the point of trading a losing trade? So I wouldn't be in this if I didn't think that it looked really good. And I still think that, despite the fact that there's been no reaction. And actually, the longer it takes to react and not get above, first of all, the 20, then the channel or wedge top, then the 50-period moving average, then the 100, then the, get out of this, what I call the chop zone, moving into the day chart. I call it the chop zone. You can see why, the market can get trapped in that zone, in a bog, really, between 2.8 and 2.5. So we don't really want to hold around in here for too long, and we want to see this bounce out. So anyway, if we do move down, and I think 2.5, I'm still looking at the bottom of this orange zone as a potential target still, which means we could still faff around here in this channel and do a little bit more. Maybe we won't get lower than that double bottom that we've already seen, but maybe we've got to do something like that still. So maybe we won't get down below that 1 up, 1 down, 4-hour candle set there. There's another little one there. It all looks quite constructive, to be honest. And if you look at this on a, I suppose, 15-minute chart, it all looks quite good. There's the last candle. And, you know, there's the whipsaw 1 up, 1 down that you can see on the 4-hour. There's another one, 2 whipsaws. And that whipsaw there subsequently took out, whoops, something happened. Can you still see me? Let's just check. Something weird happened. I think it's okay. I just lost my screen. Anyway, so that whipsaw there subsequently took out 2 swing lows. In other words, liquidity traps or bear traps. Took out that one there. Let's have a look. Took out the one in the middle, that one there, took it out and bounced out. So a liquidity trap, got the bears trapped, got the longs interested. Then it came back down again. Again, another one down below that next new low that we've just created, trapped the bulls, got people interested in the short side and bounced out, trapping the new bears. So a very, very nasty whipsaw at a key level at the bottom of the wedge with 2 liquidity traps, bear traps in the process. Not just one, but 2 in a row. Absolutely devastating and decimating highly leveraged retail traders. You might be one of them. So, and since then, we've not made a new low. And so 2 clear outs, 2 bear traps, 2 liquidity grabs, and maybe they're done with it now. Another little one over there, maybe just a little more playing around. This is clear manipulation, right? There and there. It's whipsaw motions, which they use to take profit at the top, take profit at the bottom, take profit at the top, take profit at the bottom, whilst you're all getting wrecked. And finally, the real move begins. And you can see, I think, generally, if you look at the COT report, the real move is a groundswell and underswell to the upside. And not only the COT report, but the general market damage to the South Pars gas fields in the Persian Gulf, damage to facilities in Russia and in the Crimea and in the Black Sea region, more demand for natural gas. Donald Trump talking last night, if you were watching, about these companies that are building natural gas electricity generation plants to power AI data centers, warehouses, Bitcoin mines, and general brainy stuff, right? Building natural gas powered electric plants in the US, and they're under construction as we speak. And Donald Trump spoke about it last night, just a few hours ago. So I think that's the real story. And this is the messing around designed to clear out the bottom, get you all trapped, get you all negative and bearish and miserable and upset and illiquid and broke. Lots of it going on here. Absolutely magnificent. You know, they did a good job, to be honest. Really good job. Twice. And now the real move, potentially, and I'm not saying this is it, but it's what I believe. And until proven otherwise, I'll keep with that story. The real move is being heralded by Trump, by these companies, by, you know, bombing gas fields, just by everything, really. And what we need to see is industrial demand continue to grow. We've seen a weak economy. GDP growth was very poor. The next slot that needs to fall into place for natural gas to remain a bullish commodity for a while is for industrial production. PMIs need to pick up, all that sort of thing, and optimism. But look at this 15-minute chart. I think it looks great. This is the strongest 15-minute candle. Is it 15? Yeah. Strongest 15-minute candle we've had in quite a while, actually, going back a few days, apart from the whipsaw. Right? Just ignore all the whipsaw. This is the strongest 15-minute candle that we've had since the 10th, Friday, the 10th of April. I mean, now the 16th, so about a week ago. This is the strongest 15-minute candle in a week, apart from the messing around fake whipsaw stuff. All right, I hope that you found that useful as a natural gas trader yourself. I find this stuff fascinating. I hope you do. And if you're a natural gas trader, you should find it fascinating because it affects your profits and the way you trade. Now, crude oil, just short, really. You know, this is going to keep moving down. We might get blips up back into the channel occasionally. I don't think so. Maybe, you know, anything can go wrong over there in Iran Iran, but and we've still got a gap above us, and the channel center line has not been retested. So I'm still allowing for the top of the gap at $100 still, another retest of $100. We're down below 90 now. We want to actually stay below 90. If we can stay below $90 psychologically, the rest of the risk markets should do okay. Even though it's pretty expensive, it's not above 90, and that's a key level. When you're into the 80s on oil, the world seems like a lot safer and better place. When we're in the 90s, you're already thinking 100's just above. So we don't want to be in the 90s. We want to be in the 80s, big psychological switch in mind. And we're in the 80s now, 88.4. And it would be a pity if we had to get back into the 90s or into the hundreds, or as far as 100, but it could happen. Nevertheless, I've added some more shorts on here. We've taken profit on those longs right up here where you can see that next red arrow. So we got short, we got long at the bottom, took those longs off and got short again, and we got even shorter again on the breakdown through the channel. Target is $68. That's the gap miles below. There's a gap above us at 100, the top's at 100. So we've got two gaps, one at 68, the bottom of this other one is at 98. So 68, 98. Do we have to visit both of them? If we do, which one first? Or do we not have to visit both of them? And if we don't, we're not going to visit the top one. We will definitely visit the bottom one. And so it's all eyes on $68. It's also the top of the wedge, not the wedge, the falling channel that we broke out of that sparked off this move at the beginning of the Iran conflict. And so we must return back to where we started off before the Iran conflict, and that is right there at $68. You can see I've got a blob drawn in there even, which I drew miles, a very long time ago, and I'm going to allow for this blob to be scooted along now because it's not going to get there in time, and I'm now aiming for about $60. We're going to get through 68 and this channel top, but by the time we get there, we may just be, miles down here already. I'm just going to draw this very roughly. It's going to take some time, so maybe it's going to take all that time, and that would take us into next year really to get back down into the 50s. So that's, it's going to take time. If it takes that long, it could be a lot quicker. And there are ways and means in which the US can propel this price down faster than usual through manipulation of price and through rhetoric, and potentially through manipulation of reserves and the dollar and so on. It's all quite a big story, this oil story, and it's not just a small story. It's a big one, as I said. It's quite a big story. It's not just a small one, it's a big one. All right, let's go back to the 4-hour chart on natural gas and keep an eye on that. And now looking at the 4-hour, it looks a lot better.